So today, we're going to talk about a massive deal that completely reshaped one of Africa's biggest and most successful companies. We're talking billions of shillings, a huge shift in power, and, a surprising wave of anger from the very people who helped build the company. Okay, let's get right into this Safaricom shakeup. Right here. This is the heart of the whole storm. You see, while the deal looked great on paper, financially speaking, a lot of local Kenyan investors felt totally left out. They thought, and many still do, that they should have gotten the first shot, that preemptive right to buy those shares. For them, this wasn't just business. It felt personal, almost like a betrayal.
To really get why people were so upset, you have to understand what Safaricom means to Kenya. I mean, it's not just some company you see on the stock exchange. It's a national champion. It's the company that gave the world M-Pesa. It's completely woven into the fabric of daily life there. So for Kenyans, owning a piece of Safaricom, that's a big deal, a source of real pride. And when that feels threatened, people react.
Okay, so what actually happened? What did this deal really look like? Let's follow the money and see where the power really shifted.
This table really lays it all out. You can see the Kenyan government sold off a big chunk of its shares. And who bought them? Vodacom, the South African telecom giant. That single move instantly made Vodacom the majority owner, giving them a controlling 55% stake. Now look at the public float. That's the shares owned by everyday people. It stayed at 25%. They weren't forced to sell, but the game had definitely changed around them.
Now, the government didn't do this for peanuts. We're talking about a staggering 245 billion Kenyan shillings. That's about 1.6 billion US dollars. That is a huge amount of money, and it was obviously the main reason they decided to sell. But the big question was, what were they going to do with all that cash? Well, here's the official plan. The government said it was a strategic move. They were going to use that money to kickstart a sovereign wealth fund. Think of it like a national savings account for the future. And also to pour money into big infrastructure projects. Basically, the idea was to sell one really valuable thing to build a bunch of other valuable things, and hopefully borrow less money down the road.
So, yeah, the government had its reasons. But that brings us right back to the people at the center of this story, those thousands of everyday Kenyan investors. For them, this whole thing was, well, it was complicated.
For the small investor, it was like a coin with two very different sides. The good news? Hey, Vodacom paid top dollar for those shares, which immediately made everyone's shares worth more. Your investment just went up in value overnight. But the bad news was a really bitter pill to swallow. You never even got a chance to buy in, and you had to watch as control of a national icon was handed over to a foreign company. Let's just list out these frustrations, because it wasn't just one thing. First, no right to buy the shares first. Second, they didn't even offer the shares on the local stock exchange. And on top of that, people felt like they just weren't consulted, like this was all done behind closed doors. It all just boiled up into this deep frustration over losing control of a company that felt like it belonged to Kenya. Now, here's a really important point we need to make clear. Vodacom actually got an exemption, which meant they didn't have to make a mandatory offer to buy out all the other shareholders. And what that meant was that every single retail investor could hold on to their shares, they could keep benefiting from Safaricom's growth, keep getting those dividends. So they lost a degree of influence for sure, but they didn't lose their seat at the table. All right, so the deal is done. The dust has settled. What does this all mean for the future of Safaricom? With Vodacom now firmly in the driver's seat, what's next? Well, from a pure business perspective, you can absolutely see the argument for this deal. With one single owner calling the shots, decisions can be made way faster. That could supercharge things like the growth of M-Pesa or the big expansion into Ethiopia. You can also expect more investment in cool new tech like 5G. And for investors, Vodacom will likely keep that intense focus on profitability, which is great news for those famously reliable dividend checks. But, and there's always a but, isn't there? With that upside comes some pretty significant risks. The Kenyan government is now just a minority shareholder. Its voice is much quieter. And that raises a huge question. What happens if Vodacom's global plans don't line up perfectly with what's best for Kenya? There's a real concern that future decisions might be made to benefit the parent company's bottom line, maybe even at the expense of the local market that made Safaricom what it is. So, when you boil it all down, when you strip away all the details, this entire story really comes down to a fundamental trade-off. It's control versus cash. And that's the final balance sheet right there. The government decided to cash in a prized asset to meet its immediate financial goals. And in return, investors saw the value of their holdings go up.
but they had to give up a piece of local control and maybe a little bit of that national pride that came with it.
Which leaves us with this really big, thought-provoking question, one that countries all over the world have to grapple with. Is cashing in on a national champion to pay for public projects worth the price of handing over the keys? It's a fundamental debate about financial value versus national values, and in the case of Safaricom, it's a debate that's definitely far from over.